Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the crazy world of corporate finance. And today we're diving into Sanmina Corporation. Let's just say they've been busy bees making some big moves, and we've got the official report to prove it. Seriously, some of these deals are so big, they might need a bigger pen to sign them. And hey, if you love breaking down these corporate giants like we do, make sure you hit that subscribe button and join our Discord community. The link is in the description below. Alright, so imagine this company is getting a big loan, like a really big one, and then they go and buy another company. That is pretty much the headline here for Sanmina. They've been upgrading their borrowing situation and also completing a major acquisition. We're looking at a Form 8K filing, which is like a special alert to the public about really important stuff happening fast. This one is all about some significant financial dealings. Sanmina Corporation, a company that has been around and is known in the manufacturing and hardware space, has been making some strategic moves. Let's get into the nitty-gritty of what this report tells us about their financial health and their plans. So first up, Sanmina has been dealing with their credit agreement. They initially had a pretty hefty credit facility, a whopping $3.5 billion, split between a revolving line of credit and a term loan. Think of it as a giant pool of money they can borrow from. But they didn't stop there. They've made some adjustments called amendments to this agreement. The first amendment created a new type of loan, a delayed draw facility. This means they can borrow more money later up to a certain point for specific purposes. Then came amendment number 2, and this one is big. They added another $800 million to their loan, a new term loan facility that they're calling Incremental Term B-1 loans. This extra cash was specifically for an acquisition they were planning. So why all these loans and changes? Well, it is all tied to a major acquisition. On the 27th of October 2025, Sanmina completed the big purchase. They acquired ZT Group International, Incorporated, or ZT Systems, and all its subsidiaries. ZT Systems is a big player in providing the computing infrastructure, the heavy-duty computers for hyperscale cloud companies. Think of the companies that run all the big online services you use every day. The seller was a subsidiary of Advanced Micro Devices, Incorporated, or AMD. This purchase was done using an equity purchase agreement, which is basically a contract to buy all the shares of a company. Now, how much did this cost? Get ready for some big numbers. They paid a massive $2.4 billion in cash. On top of that, they also tossed in about 1.15 million shares of Sanmina's own stock, valued at around $150 million. That is a lot of stock. But wait, there is more. The sellers could get an additional $450 million if ZT Systems hits certain financial targets over the next 3 years. This is called contingent consideration, meaning it depends on future performance. So now ZT Systems is officially part of the Sanmina family. This acquisition is a huge step for Sanmina, likely aiming to boost their capabilities in the high-growth AI and cloud computing infrastructure markets. Let's talk about the money trail. All these loans we mentioned earlier, Sanmina officially took on that debt on the same day they closed the acquisition. That means they borrowed $1.4 billion under their existing term loaner facility and the new $800 million under the term loan B facility. This massive borrowing was used to pay for a big chunk of that ZT Systems purchase, pay off some old debts, and cover all the costs associated with these deals. To back up these loans, Sanmina has put up pretty much all of its assets and those of its subsidiary guarantors as collateral. This means if they can't pay back the loans, the lenders can seize those assets. It is a pretty strong guarantee showing how serious they are about these obligations. Now, ZT Systems also has a receivables purchase agreement with PNC Bank. Think of this as a way for ZT Systems to get cash quickly by selling its outstanding invoices, what are called receivables, to PNC at a discount. This is a facility that can go up to $850 million, though it is important to note it is what they call uncommitted. This means PNC Bank doesn't have to buy the receivables, it is up to their discretion. Interestingly, as of the end of October, ZT Systems wasn't actually using this facility. No receivables had been sold to PNC. The way this works is PNC buys the invoices for a price that is usually the invoice amount minus a discount. The discount is calculated based on interest rates and how long until the invoice is due. ZT Systems has to promise that the invoices they sell are legitimate and meet certain standards. If an invoice doesn't meet those standards, ZT Systems might have to buy it back. This agreement continues even after ZT Systems became part of Sanmina. It's a pretty standard arrangement for managing cash flow from sales. Let's circle back to that stock Sanmina issued as part of the deal. They issued 1,151,052 shares to the seller of ZT Systems. These shares weren't sold on the open market, they were part of a private placement, and the sellers can't just sell them all at once. There are restrictions, meaning they'll be released gradually over 3 years. This is often done to ensure the seller has some ongoing interest in the company's performance. The reason they could do this without registering the shares with the government is because it falls under an exemption in the Securities Act, specifically Section 4(2), which generally allows for private sales to sophisticated investors who don't need the full protection of public registration. Now, as with any corporate filing, there is a section for forward-looking statements. This is where the company talks about what they expect to happen in the future, but they wrap it in a lot of legal language to protect themselves. They're essentially saying here, these are our best guesses about the future, but things could change, and we're not responsible if they don't turn out exactly as we predict. This is standard practice and part of managing legal risk. Some of the risks they highlight include not getting the expected benefits from the acquisition, like cost savings or growth, or that these benefits might take longer than planned. They also worry about interest rates on their new loans being higher than they hoped, and disruptions from the acquisition itself. They point you to their main annual filing, the 10K, for a more detailed list of things that could go wrong. It is always a good idea to check those risk factors. Finally, they mention that detailed financial statements for the acquired business, ZT Systems, and pro forma financial information, which is basically what the combined company would look like financially if this deal had happened earlier, will be filed later as amendments to this report. This is normal for acquisitions because getting all that historical data together takes time. So, what is the big takeaway here? Sanmina just made a massive bet on the future of AI and cloud computing by acquiring ZT Systems. They financed this enormous purchase with a significant amount of new debt, which comes with its own set of risks, like higher interest rates and the need to generate enough profits to cover those payments. They're essentially streamlining their borrowing and using it to fuel a major expansion. Looking at it from 100,000 feet, Sanmina is clearly going for growth, and they're not afraid to take on debt to achieve it. This is a bold move that could pay off handsomely if ZT Systems continues its strong performance and if Sanmina can effectively integrate it into their operations. However, the increased debt load is a crucial factor to watch. If the market for AI infrastructure or the broader economy takes a downturn, servicing that debt could become a significant challenge. The success of this acquisition hinges on synergy realization and continued high demand for the services ZT Systems provides. Alright, that is our breakdown of Sanmina's latest filings. What is your take on these massive deals and what they signal for Sanmina's future? Are they taking on too much risk? Or is this a brilliant strategic move? Drop your thoughts in the comments below. If you found this deep dive valuable, please hit that like button. It really helps get these insights to more people. And of course, subscribe for more corporate decoding. Don't forget to check out our Discord community in the description for more discussions and to connect with fellow finance enthusiasts. Thanks for watching, and we'll see you next time.